What's up, guys? I hope you're having a good day. And despite the fact that my portfolio is down $800, I'm having a good day. I know that tomorrow, if I buy some stock, I'll get some pretty nice discounts. But as you can see, my portfolio dropped to $49,271.18, and I'm getting crushed, down 1.61%. The S&P 500 is beating me. And so today in this video, I'm going to be talking about Devo, which is another covered call ETF. I just realized that I never reviewed this ETF, even though I've owned it before. And I'm going to go right to my activity feed and show you guys that I owned Devo for about 3 days. As you can see, I bought it for $1,215.22, and I hit the ex dividend date. I want to say, I think it was the 28th. Then looks like I sold it for a gain of $1,222.47, and I received a $4.89 dividend on December 31st of 2021. So that is my experience with this ETF. And before I get more into the video, the reason I bought it and sold it so quickly was just because they have a lower dividend yield than JEPI, and I just figured my money was better off to put into JEPI because how well JEPI has been performing. And so let's go into Seeking Alpha, which might update on us. So currently it's trading at $35.91. And as you can see, in the last year, it was only down 3.31%, which means it crushed the S&P 500, vastly outperformed it. On the 52-week range, it's on the upper half. And then we have an expense ratio of 0.55%, which is a little high. That means you'll be paying $5.50 per $1,000 that you have invested. And this is a monthly dividend. Current yield is at 4.7%, 2.61 billion assets under management. And then they do have a volume of $371,744. Then let's go into the dividend. And now, as you can see, there's that 4.7% yield, $1.71 payout. Says they have a 5-year growth rate of 22.21% and 0 years of dividend growth. Then what I wanted to show you guys was the dividend history. Now, at first glance, it looks like over here that their dividend was high and then they decreased it by a lot. However, when you hover over it, you can see that they initially offered a quarterly dividend, and then after June of 2018, they started with the monthly, and then they offered that large special dividend in December, and then that led to them lowering their dividend in January. However, from February of 2020, they've consistently given a dividend every single month around the same range. Now let's look at their fact sheet. Why would you invest in Devo? Income potential. It's comprised of high quality, dividend-oriented stocks along with covered calls on individual stocks. And active management. It allows the portfolio manager, CWP, to identify opportunities and risks and act on those decisions in real time. And it seeks to lower volatility. The dividend and option income may provide lower share price volatility versus the overall market during times of broad-based market declines. And as you guys saw earlier, it was down 3.31% in the last year, which means it did exactly what it was intended to. It outperformed the S&P 500 in a down market. And then right here, Devo seeks investment results that correspond generally to an existing strategy called the Enhanced Dividend Income Portfolio. The strategy is managed by Devo's sub-advisor, Capital Wealth Planning. And then, so we already seen the objective. I want to scroll down to their top 10 holdings. So as you can see, their top 10 holdings are all great companies with Home Depot, Visa, McDonald's, Merck, Chevron, Procter & Gamble, United Health Group, Goldman Sachs, JP Morgan Chase, and Microsoft. And then this just shows Devo's selection methodology. They choose dividend growers. Devo is managed with a strong emphasis on owning high quality large cap companies with historical dividend and earnings growth. Sector allocation, DIVO is relatively balanced among the traditional 10 S&P sectors, with CWP determining which sectors to over or underweight based on various factors. And then security selection, DIVO consists of 20 to 25 stocks, which are screened and adjusted according to attributes including market cap, management, track record, earnings, cash flow, and return on equity. So now that is different. Their holdings, they only have 20 to 25. That's lower than normal for covered call ETFs. Usually they have at least 100. So now they have tactical covered call writing. Covered call options are written on individual stocks on a tactical basis, not an index approach. Now, if we look at their sector allocation, they have 21% in healthcare, 13 in energy, 13 in information technology, 12 in financials, 12 in consumer discretionary, and then 10 in consumer staples, and so on. And then now let's go to the portfolio backtest. I did $1 million, and I'm comparing Devo to the S&P 500. I wanted to compare it with JEPI. However, JEPI doesn't have enough data. So with doing Devo and the S&P 500, we'll get more years to compare. So scrolling down, with an initial balance of 1 million, Devo actually outperformed the S&P 500 with 1.981 million, and the S&P 500 is just 1.9 million. So almost 80,000 more with Devo. Then actually, if we look at the best year, Devo had 24.9%. The S&P 500 had 31.35%. And going into the worst year, Devo was only down negative 3.18%, whereas the S&P 500 was down negative 18.19%, which shows that Devo has strong holdings and it does well during a bear market. So then if we look at the portfolio income, you can see that it actually goes up and down a little bit. So in 2017, you would have earned $45,305, and with VOO, you would have earned $21,433. And then this goes up in 2018. Devo increased by about 15,000. And then in 2019, Devo jumped almost double to 114,000. However, in 2020, they dropped down to 73. And then 2021, they increased to 86,000. And 2022, they increased to 91,000, almost 92. So this is a concern that they spiked up and then dropped their dividend income. However, even the drop from 2019 to 2020, it is above 2018, and it looks like their dividend income sort of increases by about 10,000 or more every single year consistently if you knock out 2019, which was a crazy year. And so with that being said, like I showed you guys earlier, I don't own Devo, and that's just mostly because JEPI is outperforming it. And as I mentioned, I wanted to compare Devo to JEPI, although there wasn't a lot of data to do that.